Can you read out the question?
Yeah, okay. Mohan is a sole trader who does not maintain a full set of accounting records. He was able to provide the following information,
Mhm.
and then the information is given.
On 1st May 2008. So this is the beginning date. So our year
Mhm.
is starting on 1st May 2008. So when it will over?
April 30th, 2009.
Hmm?
April 30th, 2009.
30th April 2009. Right?
Nine. Yeah.
Now see beginning date we have these assets and liabilities. Fixtures,
Mm-hmm.
motor vehicle, inventory, trade receivables, balance at bank, trade payables. So these are the assets and liabilities on the beginning date. Now see
Mm-hmm.
during the year what happened? Receipts given. We got money from whom? Trade receivables, $258,800. Then we made payment to whom? We made payment to trade payable. We paid for motor expenses, then journal expenses, then we brought new fixtures, then Mohan has withdrawn the money for personal use, right? Okay, then see on 30th April last date we have these two current asset and one current liability. Inventory given, trade payable given, trade receivables given, and trade payables given, right?
Yeah.
Then read out the last paragraph.
Fixtures should be depreciated by 10% per annum on the cost of fixtures held at the end of the year. The
Mhm.
motor vehicles should be depreciated by 25% per annum on cost.
Okay, now what is the requirement A?
Prepare the income statement of Mohan for the year ended 30th April 2009.
Yes, first they are asking to prepare income statement. So let me draw the format of income statement. Okay, so which item we should take first in the income statement?
Revenue.
Yes, so revenue is, let me check whether revenue is there. Revenue is not given, we need to find revenue. Right, now how to find revenue? To find
Revenue is assets
revenue,
minus.
we'll prepare total trade receivable account.
Okay.
Okay, so see how to find a revenue. We need to prepare total trade receivable account. So it is asset, right? Trade receivable is asset or liability?
Asset.
So opening balance we will write on the debit side. So on the first way on the first May check, do we have trade receivables?
Yeah. 17,300.
17,300. So that I will show on the debit side. Balance brought down 17,300. And closing balance will come on the credit side, right?
Mm-hmm.
Balance carried down. So closing balance also given in the question. See on the last date. We have
Yeah.
trade receivables $21,500.
21,500.
So that I will show you $21,500. Now definitely during the year from trade receivables we might have got the money, right?
Mm-hmm.
So see how much money did we receive from the trade receivables?
458,800.
$800. So when we are getting money from trade receivables, so trade receivable will increase or decrease?
Decrease.
Decrease in asset, credit, right?
Credit.
So credit side I will write bank balance. How much money I got? 458 $800, right?
Yes.
Hmm? 458
No, it's
$800, yes.
458.
And there is no discount allowed, there is no bad
Okay,
debts,
I think you
nothing is
wrote
given.
455.
458 $800.
Yeah.
458 $800, right?
Yeah.
And in question, discount allowed is not given, bad debts is not given, otherwise I would have recorded that also, right?
Yeah.
So we have only these three information. Now compare both the set. So this plus closing balance, same money I will take here, and from this total I will subtract this opening balance. So this is the revenue I got,
Okay.
sales, right? Balancing
Mhm.
figure. So it means I sold goods on account, and when I sell goods on account, trade receivable will increase or decrease?
Increase.
Increase in asset debit. So this debit side, whatever difference amount we are getting, that is actually sale. Clear?
Okay.
So
Yeah.
same amount I will write here, 460,000, $63,000.
Yeah.
Right?
Hmm.
So understood how we got this figure.
Yes.
Now from this we will subtract what? Cost
Less cost of goods sold.
goods sold. So what should I take first?
But opening inventory.
Opening inventory, how much is it given?
Yeah, 19,600.
19,600. Then I will take what?
Add purchases.
Purchases is not given. So for
Oh,
that I will prepare total trade payable account, which is similar to purchase ledger control account. Total
yeah.
trade payable account, right? So it is asset or
Mm.
liability.
It's liability.
So opening balance will come on the credit side, right?
Mm-hmm.
So can you tell me what is the opening balance on the first date? Do we have trade payable?
Yes.
16,450. So 16,450. Then closing balance I will write on the credit side. Clear?
Mm-hmm.
So closing balance given in the question how much? See on the last date trade payable 15,510, right?
Yeah.
So that I will write on the debit side. Opening balance credit side, closing balance debit side. Now during their trade payable definitely we paid them some money, right?
Yeah.
So see that I will get from here payments from the payment section. How much did I pay to the
Mm-hmm.
trade payables?
Uh, 20, no, 371,800.
When
820.
I will pay trade payable, when I will pay to the trade
Mm-hmm.
payable, liability will increase or decrease?
Decrease.
Decrease in
Debit.
liability, debit, right?
Yeah.
So I will write on the debit side 371,820. 371,820, right?
Mm-hmm.
Now compare both the sides. There is no trade discount received actually. Nothing is there.
Yeah.
Okay, no discount received. Otherwise, I would have recorded that. Now from
Do we
this,
also record any accrued or prepaid?
no, nothing to do with that here. So
Okay.
difference amount I got this. This is actually what purchases. When you buy trade payable will increase or decrease?
Trade payable will increase.
Increase in liability.
Credit.
So see credit side, whatever difference we got, that is purchases. So same amount I will take here. Got it?
Yeah.
370,880.
Mm-hmm.
I hope it is clear till now.
Yes.
Understood how I found the sales, how I found the purchases. These both account I
Mm-hmm.
need to make. Right? Now I will take
Yeah.
closing inventory, which is given here. See closing inventory 23,080, right?
Yeah.
So that I have to subtract. Understood?
Yes.
Now see what will be the amount of cost of goods sold. Opening inventory plus purchases minus closing inventory. So this is
Mm-hmm.
the amount of cost of goods sold we got. Right?
Yeah. Yeah.
Now what will be the gross profit? Sales minus this cost of goods sold. So we got the amount of gross profit. Till here, tell me any doubt?
No.
No. Now next, there is no other income. So directly what I will do, I will subtract expenses.
Yeah.
Expenses I will take. So expenses I will get from the payment side. Okay.
Mm-hmm.
So see, can you see the payment?
Yeah.
What is the second payment?
Motor expenses.
So that I will write here. Motor expenses. How much amount motor expenses?
15,000. 70.
15,070. There is no adjustment given, right? Then
Yeah.
next we have general expenses. How much amount?
25,500.
Again, there is no adjustment, so same amount I will write here. Next,
Mm-hmm.
new
Next
fixtures is
is
asset, so
new
that will not come. And
yeah,
Mohan's personal use is also nothing
drawings.
to do. It is drawing, nothing to do with expenses, right? Done.
Mm-hmm.
Got it, no? One is asset,
Yeah.
one is drawing. Now, last we need to consider depreciation. Depreciation on what? Fixtures.
Fixtures, yeah.
Can you read out that line?
Fixtures should be depreciated by 10% per annum on the cost of fixtures held at the end of the year.
10% on the cost. On the cost means a straight line method, right?
Yeah.
So, but which fixture, whatever fixture we have on the last date. Okay, so on
Mm-hmm.
that we will charge 10%. So, can you tell me what is the amount of fixtures on the beginning date? What is the cost?
It's 35,
Cost.
31,000.
So that I will take cost. Only cost I have to take 31,000. Did I buy any new fixture during the year?
Yes.
How much money?
4,000.
So that I will take for that. So total how much fixture?
35,000.
Total cost is 35,000 and 10% of that will be how much? 3,500.
30,
Clear?
4,500. Yeah.
Okay, then I have to charge depreciation on motor vehicle, right?
Mm-hmm.
Depreciation on motor vehicle, right?
Yeah.
So can you, what is the rate?
25%.
On cost. This is also on cost.
Mm.
So what is the cost of the motor vehicle beginning date 15,000
15,000.
and there is no new purchase of motor vehicle, right?
No. Yeah.
So direct
Yeah.
25% of that I will take. So
Mm-hmm.
15,000 and its 25% will be 3,750, right?
Yes.
So I have taken all the expenses and depreciations, right? So what I will do now,
Mm-hmm.
I will make the total of all these
Expenses.
expenses. So let's see what is the total. So total of all these expenses is coming to
Eight,
$47,820,
20. Yeah.
right? Now what should I do
Mm-hmm.
to get net profit? From gross
Minus the
profit,
gross profit,
I will subtract
less
this total
expenses.
of the expenses. So I got net profit. Net
Profit.
profit. Okay. So any doubt, tell me. Solution is there in front of you.
No.
Any doubt you want me to clear? Hmm?
No.
Everything is fine.
Yeah, so it's just that if we don't have revenue and we don't have
Purchases. So we need to
purchases, we
prepare
just
these
need to
two
use,
accounts.
yeah.
Okay, with these two accounts, we can easily find out what is the amount of revenue and
Mhm.
what is the amount of purchases.
And if anything else is missing, we just have to make the income statement and find the missing figure.
Yes. Okay, we
Okay.
are done with requirement A. What is requirement B?
Prepare a statement of financial position of Mohan at 30th April 2009.
So they are asking to prepare balance sheet actually, right?
Mm-hmm. Yeah.
So let me hide this and prepare the format of balance sheet, statement of financial position, right?
Mm-hmm.
So let's see how it will be. So first let me write the heading, statement of financial position. Okay, and here we will write for the year or as at?
Asset.
As at uh,
30th
30th
April
April
2009.
2009. Done. and these are the columns for amount. Okay, so first we will show assets, right? Okay, first we will take all the current assets. Let's see. So assets on the last date we have what? Bank balance I have to show na first.
Yeah.
Okay, but bank balance is not given. Opening
Wait,
bank
don't we
balance,
start with non-current assets first?
we can do that also.
Okay.
No problem. So first I am taking here current assets. Okay.
Okay.
So what is the opening bank balance? 9,750, right?
Yes.
But we will not take that. We need to find closing balance, right? So see how I am finding. Opening balance I will take 9,750. 9,750. Then I will add what? All the receipts, right?
Yes.
Let me do it here. Let me calculate here. Opening bank balance is how much? 9,750. 9,750. Then we have what? Receipt. We got 458 $800. So that I will add. And then I will subtract all the payments. Isn't it?
Yes.
Minus
Yeah.
3,71,820 minus $15,070 minus
Twenty-five, five hundred,
$25,500 minus 4,000
4,000,
and minus 20,000, that minus 20.
20,000.
So let's see what is the closing bank balance. We got how much? 32,160.
Yeah.
Understood how I got this closing bank balance?
Yes. So receipts minus
Very well.
payments plus. Yeah.
Opening balance, then receipt, then minus all the payments. So closing bank balance we got 32,160. So that I will take here. I hope till here any problem, any doubt if you have
No.
this. Huh?
No.
No. Okay. Then next I will take a trade receivable. Let me put it here. Your last date, how much? Sorry, inventory I will take. Last date we have inventory. What is the value? 23,080.
Yeah.
Then I will take trade receivables. How much? Hmm?
Trade receivables is 16. Sorry, 21,500. Closing. Yeah.
Okay, done. There is no any other current asset. Okay.
Is trade receivables? Oh yeah, trade receivables. Okay.
Now I am taking non-current assets. So non-current asset first I will take fixtures.
Fixtures.
Clear?
Yes.
So fixtures tell me what is the book value 24,800, isn't it?
Yeah.
And did I buy any new fixture?
Yes. 4,000.
How much?
It was 4,000.
4,000, right?
But then you have to decrease the 10% for this year's depreciation.
Yeah, this year's depreciation I have to decrease, right?
Yeah.
So what is the total fixture as of now?
Uh,
28,800, no?
yeah.
After adding purchases to the opening value, we got 28,800. And from this I will subtract what? Depreciation.
Depreciation.
So let me check what is the amount of depreciation on fixture was 3,500, right? So
Yes.
that I will subtract. So subtract 3,500. So see how much value we will get. 28,800 minus 3,500. So this is the book value of the furniture, closing book value. Clear? Then I will take motor, vehicles. What is the cost of the motor vehicle? Book value
15,000.
9,000. No, book value I will take 9,000.
Oh, book value 9,000.
Then
Yeah.
less depreciation. And how much depreciation did I charge? 30,
25%.
3,750 na?
Yeah.
See, depreciation on meter 3,750 on more. So that I will charge 3,750. Right?
Mm-hmm.
So see 9,000 minus 3,750. So this value I will show.
Yeah.
Okay, any other non-current asset? Nothing.
No.
Now let me first make total of all the current asset. Total of current asset is this. Now total of non-current asset this plus 5,250. And what will be the total asset that I have to show? So total asset will be this current asset plus non-current asset. So I got this total assets. Tell me any doubt?
No.
Hmm?
No.
Got it?
Yeah.
Okay, now I will show what?
Now,
Liabilities and
current
capital.
liabilities and yeah.
Hmm. Liabilities and capital, na?
Mm-hmm.
Liabilities and capital.
Capital.
So liabilities first I will take trade payable.
But capital isn't given.
That we will find, don't worry. What is the amount of trade payables? Closing value I will take, na?
Yeah, 15,510.
And there is no non-current liability, I guess. So direct let me write here.
No, there is
15,510.
no.
Right? Only one item here.
Yes.
Then I will take capital. So capital, see how I will take. Opening capital means asset minus liability, na?
Mm-hmm.
So beginning date, all assets I will add. Only beginning date, whatever asset and liability I have, that I will add all the assets and subtract the liabilities, I will get capital.
Okay.
Do you know the accounting equation?
Yeah, yeah.
So from
Assets
asset, if we subtract
plus
liability, we will get capital,
expenses.
right?
Yeah.
So say I am taking assets, fixtures beginning date 24,800 plus 9,000, motor vehicle is also asset, plus inventory 19,600, and then
Plus
trade receivable
17,400.
17,300. Then
Plus
the
9,000.
balance also 9,750 and minus trade payable how much? 16,400.
16,450.
So we got our opening capital is this 64,000, right? To
Yes.
this I will add what? Net profit.
Net
Here.
profit.
And this year we had net profit how much? You have
Four,
to see our income statement, right? So
four, seven,
47,780,
seven, eight.
right?
Mm-hmm.
Now from this what I will do, I will subtract drawings, isn't it?
Yeah.
And drawings amount is 20,000,
20,000.
isn't it? We have seen for Mohan's
Yeah.
personal use 20,000. Now see, closing capital will be how much? Opening capital plus net profit and minus drawings. So this is the closing capital, right?
Mm-hmm.
Now
Yeah.
I will add both liabilities plus capital, and the total should be
Capital.
equal to the total of the asset, isn't it?
Assets. Yeah.
So we got the same total.
Yeah.
So total of
Liabilities and capital.
liabilities and capital. Clear?
Yeah.
So this is how we are done with what? Statement of financial position.
Position.